If you're ready to earn an extra $200 to $3,000 per day in passive income, just like the Run Guys do every single day, then like this video, subscribe to the channel, then click the link in the description of this video to learn the Run Guys' #1 way to start earning passive income online with crypto today.
This is happening faster, and at the very center of it is a system of money and value, which means that in itself it is going to accrue value faster than anything else, because that's what it's actually doing, is taking value from old places and putting it into a new place. So the opportunity set is so big, it is that perfect nexus of macro and crypto, because the macro is so fucked, which we've known for so long. You know, the massive debt, the bad demographics, you know, the polarization of the world again, the deglobalization, the globalization, all the mess that caused. All of that is going on in macro land, which is pretty miserable. And here's the solution in front of our eyes. I mean, what a time to be alive. And that's why it's so important. Everybody needs to understand this stuff. Whether you're trading this stuff, building businesses, or you're just observing it, it is incredibly, incredibly important. Since I first discovered Bitcoin in 2013, been of the opinion that this was a parallel financial system that's being built. In the last 18 months, I've realized that it's bigger than just a financial system. It's in fact the entire system of value, transfer, storage, and ownership in the new digital world. It is probably one of the biggest things I've ever heard of or seen, and it is an incredibly exciting moment in time to be part of it. And it's like learning about the discovery of oil when the Rockefellers and all of these guys started figuring out that the oil was going to make the world go round. Had you been an investor and a participant and understood what it could do and what businesses you could build across the network of oil or the mobile phone or the internet, the fortunes that were made, the changes that happened were so staggering, and this is happening faster. And at the very center of it is a system of money and value, which means that in itself it is going to accrue value faster than anything else, because that's what it's actually doing, is taking value from old places and putting it into a new place. So the opportunity set is so big, and it is that perfect nexus of macro and crypto, because the macro is so fucked, which we've known for so long. You know, the massive debt, the bad demographics, you know, the polarization of the world again, the deglobalization, the globalization, all the mess that caused. All of that is going on in macro land, which is pretty miserable. And here's the solution in front of our eyes. I mean, what a time to be alive. And that's why it's so important. Everybody needs to understand this stuff. Whether you're trading this stuff, building businesses, or you're just observing it, it is incredibly, incredibly important. So ISM going down, what does that say? It says that the probability of stimulus in the future is going up because the economy is slowing down. So basically about 9 months ago, ISM peaks and starts going down. So that tells you that in 9 months' time, i.e. about now, we should start to see a turn of stimulus. Do we see any evidence of that? Well, in Europe, they're starting to do stimulus, but it's in this direct handout stimulus pattern that I've talked about in the past, which is, hey, listen, you guys are getting killed on your electricity bills, let us help you. It's still stimulus. You know, it's not central bank printing yet, but the stimulus coming into the system, and it's happening in China, it's happening in Europe. The Japanese are doing something different. They are expanding the balance sheet by buying JGBs and devaluing their currency. It's called yield curve control. The US, many states have given out handouts to pay for electricity bills. So at the margin, things are changing. The bond market's still thrashing around trying to figure this out because the quantitative tightening is confusing the picture for bonds, because bond liquidity is ultra low, as bad as it was. Well, not yet as bad, but it's the second worst it's been since the global financial crisis. So there's an issue going on there. But generally speaking, if I look at things like forward break-even rates, they're telling us inflation is kind of in free fall right now. So those are all of the things that will tell us this. But ISM 9 months forward, so as long as ISM is falling fast, the probability goes up I looked back and found that every single time the ISM crossed 50 to the downside, the Fed stopped or cut. Stopped hiking or cut. They only stopped hiking once, which was 2016. Every single other time they cut soon after. Now, because of this inflation narrative that's left, I don't think they cut immediately, but I think they stop pretty fast. As soon as they see the economy imploding, first order thinking is recession bad. The actual thinking is, if there were to be a recession for 3 years, what are the central banks doing? Right, because that's unemployment rising for 3 years and inflation falling for 3 years. What would the central banks be doing? They would be trying to stimulate as much as possible, because we have not had a 4-year recession in, well, as long as, I think, not even the 30s, I don't think it was that long. So, but let's assume it's the 1930s again. That is incredibly positive, crypto, because there's a massive debasement of currency having to happen to try and protect the world falling apart because of the debt burden. So again, it's not about are we in recession, it is what is the outcome as growth slows, what happens to liquidity on a forward-looking basis. The world of smart contracts has barely started. I mean, literally everything we do in life is a contract. I mean, you and me to appear today together is a verbal contract. Hey, Ash, will you be there at this time? Yes, I'll be there at that time. If not, Brian Caputo is going to shout at us, or Nick will shout at us. You know, it's a contract enforced by the wrath of God, which is Nick and Brian. But everything is a contract in life. And once you start seeing the world in those terms, you realize that so many of these can be automated. And automated contracts mean higher velocity of money, less friction, less intermediary costs, all sorts of stuff in ways that we can't imagine. It's a scary world out there. Everybody is super bearish about everything. The game is to look forwards and not look at today, not extrapolate the worst, but extrapolate the most likely outcomes. The most likely outcome is not nuclear war, people dying of hunger in the streets of Europe. The most likely outcome is a solution. A most likely outcome is an increase in liquidity. A most likely outcome is a recession followed by a recovery. If you're armed with some sort of probabilistic framework and time work of that, these look like good times to be accumulating digital assets for the long haul, because it's a weird old world where you get used to, once you've been in the space for a while, kind of an 80% pullback is normal bear market, like a 20% pullback is a bear market in equities. It's 80% in crypto. The upside average is like 20x. So the risk rewards are huge. Even if I'm wrong and it goes down 50% from here, Bitcoin goes down 50% here, that's 10,000, but the upside is 20x. Well, that's still a ridiculous